Okay, first we will start from the bearish Harami and bullish Harami. So before going to the pattern, you must understand the conditions. When the price in the candle changes the entry point, then sometimes it's changed the information also. When the price close here, like this one, if the price close here, the new price start from here, or new price start from here. So this is another information from the buyers and the sellers. Try to understand what they are giving to you information. Starting from the closing price, the next opening price. So that is another thing. The starting from the closing price and the opening price to the jump up or jump down. This information is little bit different from this information. So market is moving with the rules and regulations concepts. We are learning here all the concepts that how we can reach these all concepts, how we can understand this concept to trade. So we must concentrate on each and every movement of the candle and each and every closing and opening price of the candle. That's very important. Here, look at, that is a pattern. Which one this pattern? It's called a dark cloud cover. Okay.
Yes, sir.
So dark cloud cover. So now you must understand this candlestick levels. This is a 50% level. Okay. This candle have a 50% level. This candle have a same candle have a 50% level. If the candle start from the closing price, so this is what here what it's a closing price. Here what it's an opening price. So both prices are same. There is no difference here. And in the second shape, the second condition is showing that the price start from little bit above, but it crosses then the 50% level. So this condition is different. This condition is what is different. It's a closing, it's an opening. In both conditions, there are some difference. But now, the another condition is there. The price start from jump down. We can consider this one as a dark cloud cover. We can consider as a dark cloud cover. We cannot consider this one as a dark cloud cover. Why? Because dark cloud cover have a rules and regulations. There are some concept of the dark cloud cover. If the opening price start from the closing price and covers the 50% level of the previous candle, then we can consider the dark cloud cover. If the price opens from gap up and now then covers the 50% level of the previous green candle, then we can consider dark cloud cover. But if the price gap down, open the gap down and crosses the 50% level, so now this is not a dark cloud cover. What is it? It's a bearish Harami. Bearish Harami. To understand the bearish Harami, that's the sign.
Yes, sir.
So now how we can trade the bearish Harami? Look at. We see the 50% level is broken. What appear here? A breakout happened here. What happened here? A breakout happened here. So when the pattern appear, when the breakout appear, we must wait for the retracement candle or retest the level. Sometime you will see the green candle goes up, touches this level, it's make a rejection. It's showing that the sellers have power. We cannot continue more up. You go with the sellers. That is the first condition. The another condition is there. The price comes to the opening price, the 50% level, touches, goes down after rejection. It's another point. You can trade like this one. But this bearish harami, not crossing the 50% level of this one, then what will be? Look at now. If this bearish harami candle opens from here and stop on the 50% level, then what you will do? It means it stop on the support level. You don't have to trade for the down. You have to trade for the green candle. It will go up because it closes on the 50% level, which is support level. So bearish harami, when crosses the 50% level, you wait for the retracement, it touches the level and reject, then you can place a trade. If it closes above the 50% level, you don't have to trade. There is another condition now. Just to use the mind, I'm making like this one. Just as I know about the pattern trading, then I'm just making these candles. You can also do some these type of any candle you can do. It's very easy. So what's here? It's not touching the 50% level. So even, and it's showing that that is a bearish harami. It can continue. Yes, it will continue. Goes down. Because it's not closing on the support level. So you can trade like this one, bearish harami, with these conditions. Same types for the bullish. Same for the bullish. No change. As I teach you how we can trade the engulfing candle, and you understand how we can trade also the bearish engulfing candle. There is a little bit change. Only the candles are changed. The concept is same everywhere. Now, the inside bar. It's looking like so many people confuse that is the inside bar. Because this is the mother bar and this is the inside. This bar closing inside. But the inside bar must be start from the opening price, not crossing the 50% level, or up to the 50% level. Or up to the 50% level, or not crossing the 50% level, but the price, opening price must be closing price of the previous candle. The opening price must be same. In this case, what you will do? The candle closes below the resistance. You have to trade this one. Candle not closes on the resistance. There is a gap. Go with the buyers. It will continue. So that is inside bar. And now you can understand the bearish inside bar also with the same direction. Yes, now you will be confused. I know. How? Sir, if this candle have a wick, if this candle have a wick, if this candle wick is larger, this is shorter wick, then what I will do? Wick have no meaning in here. It's calling as inside bar. No problem if wick is outside the body or not. No problem for wicks. Only the bodies you consider for the pattern. Yes?
Sir, we have to follow any trend?
Yes.
Uptrend or
yes,
downtrend,
every pattern,
trend follow?
the bullish inside bar, where it will work? It will work in the uptrend or downtrend. The bearish inside bar pattern will work in the uptrend because that is a reversal pattern. That are the reversal pattern. Okay. So inside bar, bearish harami. Now outside bar, what is outside bar? Here. All the pattern are very easy. This is the outside bar. Because this 50% level of this candle is not reaching here. This is shorter candle. If there is a red candle which crossing the 50% level of the previous body, of the forefront body, this is a forefront candle, and there is the 50% level. So now we are considering that is a bullish engulfing candle, but the body is shorter than the 50% level, or like shorter like this one. It's the outside bar. Same concept for the bearish setup. How we can trade this one? That's the okay. So how we can trade this one? Look at. I want to tell you one thing. Add in your mind. Add in your strategies. The 50% level of each and every candle is a fake breakout. If you find outside bar like a 50% level, it's a 50% level. Okay. So the next candlestick will be red, not green, because 50% breakout is a fake breakout. Yes, sometime you will find the two candle here on this level, then the market will goes up, and sometime you will found only one candle like this one. The market then again go will up. This is the way of trading these outside bars. But outside bar, like this one, below the 50% level, then how you can trade? You found the nearest support and resistance level till the market retest. If it retest here, then go with the buyers. If retest here, then go with the buyer from here. Clear?
Yes.
Mehboob,
Okay,
clear?
sir. Yes, sir.
It's easy, brother.
Thank you, sir.
Okay, no problem. These are not, these are very related to the bearish engulfing or dark cloud cover. When I study, give you a study about the dark cloud cover and bullish bearish engulfing, that time I share with you, but maybe this time I forget to share with you, but now I shared, okay? And now, okay, here now. No. So the supply and demand, okay? All other things are completed. Supply and demand and wick reading and chart reading, okay? These things we have to cover. Supply and demand, what is supply and demand? Okay, just understand one thing. Why price changes direction? I saw that when the market goes up, goes down, goes up, goes down, goes up, down, and goes up and goes down. I saw so many reversals, so many rejections in the market. What's the main reason of this rejection? There is one formula. What is that? S for supply and D for demand. Okay, just to understand, when I talk, when I show the formula, you can understand. S for supply and D for demand. Okay, now understand here. If supply is greater than the demand, you will see the downtrend. Okay, if the demand is greater than the supply, you will see the uptrend. If demand is equal to supply, you will see range. Now just to pay attention here. The demand is greater than the supply, market moving up direction. Now here, demand is decreasing and supply is increasing. I see the reversal. In this case, demand was greater than the supply, market was moving up. When supply increased from the demand, I saw reversal. Now again, demand increased from the supply, market moves up. Now again, I see the supply increased by the demand, market decreased. Again, I see the demand getting power increased, market goes up. So the change of the direction is dependent upon the supply and demand. The demand are the buyers, the supply is from the sellers. So if sellers have too much supply but there is no buyer, then market will drop. When there is no supply, buyers have so much demand, the buyers want to buy on each and every price, market will move up. So now the question is that from where the supply is starting, from where the demand is starting, how we can recognize that is a demand area, that is a supply area, that is a demand, that is a supply. So look into your life examples where you see some warehouses, always they are on the same place. Always you will see they're supplying the products from that warehouse. When the supply is over, what they will do? They again go in the market and purchased and again fill in the warehouse. And again, when the warehouse filled, they again will start the supply, the local supply. In our daily life, you will see same like shopkeepers, what they do. First they go and buy in the bulk quantity and they supply in the small quantity. That is a process we are doing in our real life. Same when in the bulk quantity, we purchase the groceries in our house, for our house, and from the house, slowly we consume these supplies. And then when it again empty all the boxes, again we go in the market and purchase all the supplies, and again the same process. So this process always we are doing the same process in the market. When you see there is no supply, the market demand will be increased, market will move in up direction. When supply increased, there is no demand, market will fall down. So that is a little bit difference here, but supply and demand is same. Just the businesses are changed, just the needs are changed. So there is a study, need and want. In the supply, there is a study, need and want. So need is what? Need, we cannot live from the basic things. Like a food. Food is our need. Shelter is our need. Water is our need. Fire, that is our need. So some things are our need and some things our wants. The beautiful house is our want, it's not a need. We can live in the shelter also, but the luxury house is our want. Luxury clothes are our want. Luxury cars our want. So there are two types of demand, the need and the want. So market is want. Market is not need, it's want. So want can be purchased on any price. Want can be purchased on any price. So if the buyers want to go up, want to purchase the things, they can purchase on each and every price. Why they are purchasing? They are purchasing because to earn the money. If they purchase here, they thought market if moving up, so it will again move up from here to here. That if market reaches here, we can earn some profit from here to here. That's the process. Why they are demanding? Why they are purchasing on every price? Because they have a chance to earn the money in the running demand, in the running uptrend. When they short sale, they have an idea that if we short sell here, market will drop because there is more supply than the demand, market will fall. If it fall, we will be benefited from the earning money. So these things are common in the market, just to understand the supply and demand. So market is moving on the supply and demand. These candlesticks showing the supply and demand. The supply and demand are the some levels, but sometime it can create a new levels also as a support and demand. So here support and resistance. So supply is resistance and demand is support. So these two things are the similar. There is no change. Just in the price action, we are saying that supply is resistance and demand is support. In other words, you can say supply and demand in the name of the resistance and demand. Okay, so support. Now we understand here. Now we are going to the chart to understand these things. So here, look at the demand increases, market going in up direction. When supply increases, market is moving in down direction. So that is a supply area. Here you can say, you are saying that that is a resistance, but in my sense, it's a supply area. From here, supply starts, it shows market going down. From here, demand starts, it shows market is going up. But how we can calculate which is the range where the next time supply will can be start, because that is a warehouse. In my sense, you understand that that is a warehouse. That is a warehouse of demand. That is a warehouse of supply. These warehouses can be changed the name. When price is above, again it's a demand warehouse. When price is below, it's come. Now again it will be the supply warehouse. So when price is below, when reach to this area, now it will be the supply warehouse. But now here it's acting as a demand warehouse. So it can be changed the place. But always buyers and sellers sit on the some levels where you see again and again you will see the reversals. Sometimes you will see like this one. You see. On this warehouse, I saw one time reversal, second time reversal, third time reversal, fourth time reversal. On this warehouse, again and again, I'm seeing the reversals. Reversals are what? Again, they are giving the supply in the market. Supplied, 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 supplied. Now supply over. Look at supply is slowly decreasing. Here, decreased, supply decreased. When supply totally decreased, market moves up. Because there is no supply, but buyers want what buyers want. They want Euro USD at any price. Market will move. They will seeking. Maybe here will be supply, here will be supply, here will be supply. They are saying, okay, now from here they bought so many quantities of the Euro USD. So that is the main thing to understand the supply and demand. Okay. And why the seller sells? There are two types of sellings. The one type, once you sell and now it's going below or not, you have no problem. Because once you sell, that is the activity, direct selling. It's calling direct selling. Once you sell the $10 watch, okay, if you get profit or not, now you take decision, you sold out this thing. Watch will be sold out here on the $10. And there is another selling, short selling. Once you open the position, when it goes down, it will again giving you profit. Profit is increasing. When it's moving down, it's giving you profit. If you want to close your trade here. So this will be your whole profit. So short selling is a contract. Once you sold out, again you have to close. Where you want to close? Here you want to close, here you want to close, here you want to close, here you want to close. Or you sold out here. Instead of going down, 1 minute it goes down, again now it's going up, 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 up. Now you have to take loss, loss. Where you want to close the loss? If you have your account is a big account, you will wait, again market goes down, now profit from your entry. Profit, now where you want to close the trade? Here. So that's the short selling. And the buying. This is the buying. When you buy here, it's going up, 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 up. After buying, you want to sell. It means close. Close the order. When you have to sell, someone will buy from you. It means you bought from here. Now, when you are going to sell here, this one, another man can buy from here. Another investor can buy from here. So this is the process of exchanging the certificates, exchanging the quantities, exchanging the products. What you understand more, you can just to understand how to buy, how to sell. These are the things same as we are doing in the real life. But in this market, we are trading in the binary options. It's a little bit different. Forex market, you have all the entries in your hand. You want to sell, you want to keep it, no problem. But in binary option, you have a little time frame. So you have to predict the candle, it goes up, you have 5 minutes or you have 1 minute. In this duration, if the price is above from your entry, you will be benefited, you will be rewarded by the profit. If in the 5 minute, in the 1 minute, your prediction is wrong, market is going down instead of going up, your amount will be kept by the broker because your prediction is wrong. So that is a thing. There is a little bit difference in the market because we are trading in the short expiry. We are purchasing the contract. So our purchasing and our selling is not affected to the forex market because we are dealing with different broker. Here we are purchasing and here we are selling the contract, the options. The options is have a time, like a bond. When you purchase any bond from any bank, the bond have a maturity time. The maturity time can be 6 months, can be 3 months, can be 12 months, can be 3 years, can be 6 years, 5 years. So many type of bonds are available in the market. Some are the compound interest bonds, some are the fixed interest bonds. So many bonds you will find in the market. So here, this is a financial instrument which called the options, binary options. So this is a financial instrument where the dealing of the finance, dealing of the rupees or dollars, you will see it's a financial operation. So in this financial certificate, we are purchasing the options. Options is a instrument. In this instrument, before purchasing, you selecting the expiry time. After selecting the expiry time, you predict the market will goes up. If in your due time, market is remain up from your entry, you will be rewarded. If the market is go down from your entry point, your amount will be kept by the broker. So that is just a entry system, that how we are entering. So the demand is increasing and decreasing. It affecting by the forex market, not affecting by the binary options.
Okay, sir.
Okay, so now I'm going to show you how we can understand the demand area. Where you see the market is going down, you must take the first breakout of the candles. There is no breakout, you are taking this one area and this one area, because that is the evening star. So evening star, if you see, the upper point and the lower point. Okay, this one and this one. This is a range now. So this is a supply area. Okay, so this is the supply area. For the next time, you will see that will be the supply. When market reaches to this area, if the supply is there, then market will be respected. So this candle shows we have no supply. Go with the buyers. So there was a supply, but now there is no supply here. Sellers are not interested to sell from here. They will show you the weakness. We have no supply. Go with the buyers. Okay, buyers goes again up. That is the demand. Here I'm seeing that that is the morning star. In the morning star, I will see the upper wick, the lower wick of the morning star. From here, when the price comes to the demand area, price again moving up. It means this demand is working here. When price reaches here, this demand goes up, but it's exhausted. It's showing there we have no power for the demand. We cannot make a deal here. They show the power, but they are not in the power to continue more up. So demand is very, very less here. So this demand one time worked here after this one, but the second time it's not working. So this is the same concept of the support and resistance. Support, one time working, next time not working. So buyers and sellers always choose the previous points for the selling for the buying purpose. Ideas, how we can create the more demand areas, just to understand. If you find that this one big one area, so this candle is demand is controlled by here, from here, this one, opening price, okay? Close opening price of this candle, and now this is here. So this area is the demand. This area is the demand. So next time when price reaches here, you will see the demand again will work here now. So this is a candle where you see the two wicks. All the meaning of these wicks is showing the demand supply here, because this candle is showing a pressure from the sellers. It's showing again pressure from the sellers. So this is a supply area. So now you have to place here to here. Where you see the two wicks larger, you can get this one. So this is the now supply area. From here, it will be again supply. Again, price above acting as a demand. Price below acting as a supply. So this line will be can be created this one. This is the zone, okay? And now here again, one example more. So if you find this one, the small candle from the buyers, the big candle from the sellers. Now you can draw the line from the opening price of the candle and the closing are higher high of the. So that is a zone now. The next time when price reaches here, you will see it will be reacted here. Here, it's reacting. But there is no supply, market again goes up. Okay, so these are the areas where you see the reversals. You can take levels from here, and then you can create a zone. When the next time price will reach to this level, it will be reacted. The sellers are again, it can give supply from this area. So this will be like this one is created like this one. Okay, so this is now supply zone. Here again on the same supply, market again goes down. I have some pictures, some different way to plot these ranges, and you can get hints from their pictures. I will send to you after this session. Okay, now supply and demand is clear?
Sir, I have a question.
Yes.
Okay, say that we are using or in the time frame for 1 minute, and then we already decided or determined which one is the demand and supply. And should we see the bigger time frame after that?
Yes. Yes, you can see. You want to see there are some settings. If you are using the 1 minute time frame, okay, You are trading the 1 minute time frame, you can see the 5 minute candle and then the 30 minute candle. Okay. If you are trading the 5 minute candle, you see the 15 minute candle and the 1 hour candle. Okay. So that is the formation. 1 minute, then you can see the 5 minute, you can see the 30 minute. Okay. So I'm going to give you one trick here. Just to understand now trick. You can, that is not related to the demand and supply, but that is related to the trading. Because of your question, I memorized this one and I want to share with you. So brothers, now just to understand this one, this is very, very helpful for you. It will increase your winning ratio if you use this one. Just to understand these things, very, very important. So here, the two charts. One is 5 minute and one is 1 minute.
1 minute.
So here, I'm here, okay? This is what?
Yes.
Engulfing candle. In the 1 minute, 5 minute, I found the engulfing candle. And 1 minute, what is here? Look at. So in 5 minutes, what I found? Engulfing candle.
Yes.
Don't expect from here the market will goes up when you are 1 minute. Because in the 5 minutes there is an engulfing candle. Don't expect this will be go up. You will see the green candle, that is a trap, market will goes down because there is an engulfing candle. Do you understand what I'm going to what I want to share with you?
Yes, yes.
Because in the 5 minute is a reversal signal. So from here on this support level, this 50 moving average, if you see that there is a pullback area, don't expect market will go up from here because there is an engulfing pattern. It will continue market down. So you in this sense you can use this higher time frame. Okay, if you find the engulfing, if you find the PSN line pattern, if you find any hammer, anything, and if you are expecting the opposite entry from here, then don't do that opposite entry because this pattern will be respected here. Your entry will not be respected because there is a pattern. The pattern have a price action. Price action, the million traders are doing the price action. Trading on the price action, not the trading on the pullbacks. Just. Okay? So here what? It's a pattern. Okay? When you see the pattern here, you saw there is a downtrend, a strong downtrend. But you are here. So but you don't see here. Okay? You are here. You are here. Because I give you the idea about the 5 minute. Okay?
Okay.
So before you was